Hello everyone and welcome to Day Trader S&P 500. Today is Tuesday, October 24, 2023. This is Dale Woodson, editor of Woodson Wave Report and Day Trader S&P 500 YouTube channel. We want to get our YouTube subscribers caught up with our newsletter subscribers. We're going to look at our subscriptions here in the NQ, and that'll bring us to that report right there. We update that every week on weekends. This is from last weekend on the NASDAQ futures. I believe that subscription is $89 a month for once a week on the weekends. And you can see we have a one down from the July 19th high, a two up with a circle around it, and then the third wave is subdividing or extending. There's one down on 927, there's two up in parentheses, and there's our three targets. And there was our trigger, 14,586. A move below the wave 1 in parentheses low signals that wave 3 down is in play. You can see the first 1-to-1 target is right there at 14,334. Okay, and that's the gist of it there. Triggers and targets, our subscribers to our newsletters are liking those. We give upside and downside triggers and targets. Okay, and you can see that wave 2 hit almost right on that 786 Fibonacci retracement within, I think it was 8.5 points right there, okay? And again, we always ask ourselves, whenever we're trading or whenever we're doing a chart, where is it wrong? Here's where it's wrong: 15,719, 75. Wave 2 cannot retrace more than 100% of wave 1. There's wave 1 down in parentheses. There's 2 up at the 786. That's where it's wrong, when it retraces more than 100%. I think we can look at the NQs since then, and you can see that's the same thing there. Got to squeeze it all in here if I can. There we go. There's that 719 high. There's one down with a circle around it, okay? And there's two up. You can see the one with the parentheses and the two up. Again, there's that near perfect hit on the 786. And this is followed through from the 21st. You can see it broke through the trigger there, okay? Trigger was the wave 1 low. Of course, it made 3 waves up after that. It's not going to just go straight down. Nothing goes straight down or straight up. And you can see our wave 3 targets there. I'll get them into play. So 3 equals 1. That should be the minimum target of 14,334.75. Here's the larger degree of trend. Wave 3 targets here, okay? Can't quite center that, but you can see them right there. They speak for themselves. But this will break down into 1 in parentheses down, 2 in parentheses up, 3 in parentheses down, 4 up, and then 5 down to complete the larger degree wave 3 with a circle around it. Okay, so we wanted to get you guys caught up with that. I want to show you guys a pic from I think it was our last report where we showed the alternate bullish count for the long term. This is going back from at least the 2009, that's year 2009 low, possibly 1974 or 82. But anyway, primary count labeled this as wave 5, primary degree, and then an A down, a B up, and a C down, which would gain equality with A at 3279. The alternate count in play had this as a third wave, okay, and then a fourth wave down, and then a 1 up, a 2 down, a 3 up, and a 4. Make or break was 41.95. Take a good look at that. Before I go too much further, there's the trigger there below the 42.16, and there's the targets there in red, the 1.1618, 2.618, 3.618 multiples. But in the blue, the alternate make or break 41.95 as of this publication, which was the 21st. And if I can get to that S&P cash, that is gone. The blue alternate count was eliminated with that move below 41.95. Okay, so that trigger was activated. These targets are now in play. Of course, it won't go straight down. So we've got the A down, the B up. Let me straighten that out there. Let me just make this full screen. That might be a little better for everyone. Okay, there we go. That's much better. So we've got a 1 down, a 2 up, and then we've got 3 equals 1 right here at 40.77. We've got a 38.80, 35.61, and a 32.42, which coincidentally or not is where wave C equals A. I've said this for, I don't know, maybe a couple years now since the all-time high. A normal correction of this advance would be 5 down for A in parentheses, 3 up for B in parentheses, and another 5 down where C equals A. That's a normal correction in a bull market. And if the market went down to 3,200 something, everybody would be freaking out, just like they did when interest rates went over 5, and we put out a report about that too. I think I mentioned that in the last report. Okay, anyway, that was the weekly. I want to get into the report we put out, get you guys caught up. Where's the 23rd here? I think we got with the midday report. I got pre-market open, midday reports, post-market close. There's our turn date of 10/24. We'll get into that more a little bit later. There's a lot going on in this chart. Okay, by the way, in highlight, the market is vulnerable and could collapse any day now, or it may do so over several days. Okay, so much going on here, but from that B wave high, you can see these dates in purple, top and bottom, and the lines. This thing is moving not just on lows in Fibonacci numbers in terms of time, but also highs right on these dates. 13s and 18, that's off by 1, but most of these are dead on, and they pointed to 1024, and this one pointed to 1025, and this is at a few degrees of trend from this July 27th high to today. As a matter of fact, as a Fibonacci 89 days. By the way, these usually have a plus or minus 1 to 2 days as far as slippage, as I call it. We can see all of our triggers here, and our targets here, and our direct hits, and the direct hit there, and the direct hit up there. But this thing is breaking down. We can look at that a little closer without all this noise going on. But basically, you've got a wave down here. You've got a 1 in circle, a 2 up there, and then 3 subdivided, and that's 1 in parentheses, and that's 2 up. And then we've got another 1, 2, and there's 3. You can see this is a third wave of at least 2, if not 3 degrees of trend. And this again was yesterday, either pre-market open or I can't remember which one. Okay, but anyway, that's what we're looking at, and we're given the 2.618 and 3.618 targets just in case, because third waves of 2 or 3 degrees of trend can take on any Fibonacci multiple they choose. Okay, that was our low as of the publication yesterday. I think it still is the low. Okay, and we're looking at that turn date there on the 24th, which is today. Okay, I think I want to get into another report here. That was the midday, and that says, okay, this has the other what I wanted to show you guys. Okay, so here we've got the midday report. I think the other one was mislabeled. Anyway, we'll get to the hourly. From that second wave high, we've got a 1 down and a 2 up, and that's where that 3 bottom, as I mentioned, at 42.13, and we have our targets up here for wave 4. Okay, wave 4 cannot go above the wave 1 low, so the make or break. Where is it wrong? This can't be 4 up if it goes above 4340.75. Okay, so we see that third wave at what looks like 3 degrees of trend unfolding there, and multiplying or extending, if you will. Okay, there's that low, and I believe we have those triggers and targets. This is the bigger third wave that's not in that picture. There's the trigger there, and there's the targets. That's the much bigger degree of trend. Where are we wrong? The make or breaks, the wave 2 at 44.30.50. I think we can see that right there, and then the other charts, the longer term charts, have these bigger make or breaks up there for wave 2. Here we are right there, 45.97.50, and the big wave B in July, 46.85.25. Okay, let's look at let's get right into the post-market close today. Oh, did we do the US treasuries? If we didn't, we'll put that out there. Okay, US treasuries update. I think we did this when the rates went just over 5 and everybody freaked out. And the point we wanted to make is 5 is 5.1, which isn't there yet. You can see this is breaking down here. 1, 2, 3, 4. There's another wave up. This should go to 5.1 at a minimum. That's where wave 5 equals wave 1. Okay, anyway, that was our trigger, That's our target. On the bigger picture, this is wave 1 up from the 2020 low, the year 2020. That's wave 2 down. You can see that took about what, 4, 5, 6 months, and wave 3 equals 1 at 7.255. So higher rates are here. We've been saying it for years. I think everybody's starting to get aware of it, and they're all like, oh, 5, you know, it went down. Somebody on the news said this, and somebody said that, and that's why it went down. The math dictates what's going to happen, and we're looking at 5.1, and then we'll get a pullback in a fourth wave, which should stay above this first wave high. Okay, we'll see how that plays out. Okay, yeah, everyone freaked out this morning when it hit 5. Our target is 5.1. That's where 3 gains a 1.618 with 1. That's the 3 in the circle up there as it relates to 1. You can see it's right up there at the 1.618. Okay, I think that's about it, what we wanted to cover on the treasuries. Okay, and let's get into the post-market close here. Okay, and here we have our targets, and it looks like this this turn date, which is today or was today, looks like that identified the wave 3 low yesterday. Okay, because there was a pretty big spike up, and it looks like a 4 to us. We'll get into that. Next turn date is 11/16. These Fibonacci sequences we've been using for over 25 years, served us well. Okay, and this one doesn't have a whole lot of slippage, but it looks like that may have identified it -1 day. Okay, we'll get into that. There's the market is vulnerable, could collapse at any time. Here is that wave 2 high on the 12th. We've got a 1 down, a 2 up. There's where that 3 is at 42.13. There's where our triggers and targets were. A move below the wave 3 low brings in the wave 5 target right there, 41.94 1/4, and a move above. And this was triggered after the market closed today. This was just after, okay, but we had a 42.8350. Our targets are 42.9350 and 43.18 1/4, okay, and I think that went up by about 10 points. We can look at that. There's our upside trigger for wave 4. You can see the targets there. Let me scroll up there. There we go, trigger targets, okay, and that was triggered. So we have a little bit higher wave 4 since we put this out. Wave 5 target is where it equals 1 right there at 41.94 1/4, and that is right there. Okay, I thought I had that somewhere. Maybe I have it in the chart. Let me look at the ES here. Let's see. Yeah, we've got it there, and there's just all that stuff, but it's hard to see on a chart like this, so we'll just get to the meat right here. Okay, there's that. Let me make it bigger screen. There we go. Okay, these are those Fibonacci dates that are all hitting within 1, and so far this is within 1 on the 1023. We'll see how that plays out, but from that October 12th high, that was hit within 8 points. That's a little bit of a stretch for a direct hit, but we've had a lot of them closer. Anyway, we've got a 1 down, a 2 up, 3 down here. There's that 42.13 low that we're talking about, which hit on the 23rd. That was a slippage of 1 day on the Fibonacci time spiral. Okay, and then there was our trigger there at 42.90, and that high is 42. I'm going to have to go to the live chart because it triggered. Okay, and then that was our wave 3 targets there. Let me see if I can find that there. Give me a minute. Let me get on the ES. Yeah, there it is right there. That went up to a high of 90.50, and that brought in these. Yeah, that was a trigger back there. Okay, so it's within 3 points of a perfect Fibonacci 0.382. Do I have that on a shorter term? Yeah, here we go. I got a few stochastics and things in there. I'll remove those little exponential moving averages and stochastics there, and let's get rid of that there. You can see that move up from that 42.13 low. We had an A, B, C for an A, and then a B, and then a C, and that's that spike up right after the close. Okay, I guess there were some announcements. We don't pay a whole lot of attention to the news, but usually news related end of spike moves up. Okay, so there is that 42.90.50 high. Okay, we can bring it back over there. There it is, and there it's within 3 points of that target. So there's higher targets for wave 4. 4s are long and sideways by nature, so this could still play out longer and sideways, but what should be next is wave 5 down, and the wave 5 down will be triggered by that break below the wave 3 low at 42.13, and that's a minimum. 41.94 and a quarter is a target there. You see we've got other targets for wave 3 if that is actually extending, but it looks like it went between the 1 and the I'm sorry, the 1.618 and the 2.618. Okay, let's leave you guys, let's get out of this here. Okay, and we'll go back to our pictures here. Yeah, this is pretty current here. Okay, with that that move up, that fourth wave, and again that went a little bit higher, so it was 42.93.50 is the 382. It's just under it by a couple points right now. We'll see how the rest of the week plays out. Should be interesting, and until next time, take care everyone.